Well, hello, folks. I'm Ellie Little, and this is your daily NeoTA wrap. When we take a look at these markets, we do it from a neoclassical perspective each time, asking ourselves what happened today, what might it tell us about the coming ones. Do this show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel LA Little. Also do a show on Sundays. And if you haven't subscribed, you might think about it because subscribing is an easy way to keep up with content. Anytime it's pushed, you're notified. It's an easy way to stay in step with what we see and what we do here at TA Today. As far as these markets and what happened today, it was an up day. Another one is we get ready for the Fed tomorrow. This market just keeps pushing higher, up a half a percent, up a half a percent here. Russell was up the most. SPX actually got, and when I look at the numbers, was actually the winner today. Energy really skyrocketing. Commodities in general getting a nice big push. You see gold up 13 bucks basically, 15 bucks from yesterday. Uh, what else we have? Silver, big rock higher, 3%, and oil was a big move today. Where's it at? 5.5%. And that, of course, pushed the energy markets. As far as what these equities are doing, what the equities look like, I'm going to start with a few of the sectors. We've got these huge bars out here, these bars down here that are kind of crazy, right? Take XLV, for example, trade all the way to 56. It's hard to take a bar like this and just dismiss it. And I don't dismiss it, but I do say, hey, if you get back over the top of that thing and you start working your way higher, that's a good thing. And what's really a good thing is if this thing actually gets up here and starts doing tests on the prior swing point lows. Now, this particular one has a ways to go, and so it's not as evident here what that means as compared to others. But if we move into some of the others, for example, if I bring up, let me grab XLP, for example. Let's look at that one, the durables. On the durables, you have a swing point low here that was broken. So if you take and draw that in, so we're talking about this swing point low, you broke it, now you're coming back above it, you're trading right here above it now. And so you're coming into the top of this thing, you're about to test it, a full retest and regenerate. Now, you can draw in some various ABCD structures. It's kind of hard to draw in this one because it's so far to go, right? If you actually make that move to the top, you're gonna end up way up here somewhere. But it might be easier to take, instead of drawing that one, to draw in a smaller one. For example, take this price point, and let me grab my drawing machine here. Let me see, take this price point, and then you have the B to here, and then back up, right? ABCD structure that can take you higher. And if you actually get that extension, it's going to take you right to the top of this or over it. I probably drew that in just a little bit too far because it actually takes you right to the top of it. But what we're seeing right now is we're seeing these ABCD structures starting to fire on some of these sectors, and those retest regenerates right off these prior swing point lows that were broken start to get tested, right? And as they do those tests, these become the critical ones because the stronger ones that led us up before are the ones you want to watch to see if we can shift back to a sideways trend instead of this downtrend that we've had in place here now for a good couple of months. Another one, for example, is the consumer discretionary. That one's pushing up into those swing point lows as well. So you have swing point lows here, and if we draw them in, you got them here and here, right? That's going to be a critical area, and we're into those price points now. And so as we move into those price points, right, we're going to try to test to the top, full retest regen up there, and see if they can break it to the sideways. So you're starting to see the kind of movement that you need to see in the stuff that drives the indexes. And what I mean by that, if you just think about it, you got stocks, stocks move sectors, sectors move markets. We're looking at the sectors here, we're seeing some improvement in the stocks. And as we see improvement in the stocks, right, improvement here leads to improvement there and eventually leads to improvement here if it works out the way you want it to, right, from a bullish perspective. let's pop over to the indexes. We've been talking about the indexes trying to move higher. It looked to me last night that we indeed were going to probably move higher into the Fed. I think I actually talked about it on Tuesday and Monday. And if I pull up the S&P 500, you can see we have moved up there, and we've actually just crossed over a swing point high here as of tonight. That break on this swing point high is going to be a change on trend. So we're going to see a shift in the trend from bearish to sideways. And that shift to sideways, given the extent of the damage here, that shift to sideways is going to be a precursor to an attempt to get back up to this bearish retest regenerate on the S&P 500. Now that's one of the weaker ones, but it got over the swing point today. It's stretching up into the Fed, and it's going to try to get a move off that Fed. We've got a lot of bearishness in this market. We got a lot of people on one side of the boat, and we got options expiration on Friday, as I've talked about. And there's a lot of puts that are going to expire, and that seems to be driving some of this underlying bid that just keeps coming into this market. Now the NDX, as we've already talked about, is already into that retest regenerate zone. The next one to hit it is going to be the NASDAQ, the composite itself. It's not quite in it tonight. It's going to hit it probably tomorrow. That's going to be the next one to test. And if we move over to the NDX itself, the NDX now is deep into that test. That test is off of this bar. And as we move up, right, we're halfway into the bar. What we're trying to do on this particular index is get to the top of the zone. And so it's going to try to do a full retest regen to the top of this bar. And then we'll see if it's really going to break it or not. Now, if it breaks it, right, that's going to bring this whole downtrend into a sideways trend and give us the potential now to go back up and test these highs potentially, right, on the NDX. If you were testing these highs on the NDX, you'd be testing those swing point, not the swing point, but the bearish retest regenerate highs off the prior swing point low that was broken. And in that particular case, right, you would be changing the whole context of where these charts are starting or have looked and how they're starting to look. So when I look at this all together, you know, the creep up here that's starting to take place as a result of so much bearishness coming into the Fed meeting is starting to actually regen, or failing, I should say, to regen lower, and that's pushing us higher. And if you take and push those, you know, ABCD structures off these lows down here, it takes you back all the way to the highs. And it's kind of hard to believe that we're going to get there. And I think it's a little early to even be thinking that you're going to get up here. But that is the structure that's in place, and you're over the B point at this point. So we'll see if it can fulfill. It would be the first time we've made a break over a swing point if it were to go up and fulfill the swing point highs, test up there and fulfill the ABCD structure. It would be the first time we've done that in a very long time. If you remember way back earlier this year, every attempt to get up and finish off ABCD structures failed. We had one we worked on for months, and it never quite finished. We got up to you know, I think it was on the S&P 500, it was up in that 34 range. It was trying to hit 38, never got there. So anyway, all that looks pretty good, right? And then Russell actually breaks out over that little high that we were talking about last night. I thought this was a critical point. If it can hold over it tomorrow, right? You're over it tonight. If you can hold over it tomorrow in the Fed meeting, right? If this thing can keep pushing, right, then this also is going to do its bearish retest regenerate up here. Now, one thing you have to keep in mind, and I don't want to keep bringing it up every time, but this area, the first time up, more than likely is going to get sold. So you can certainly consider a scenario here where, as a result of the Fed or as a result of something else, right, this eventually, you know, works its way somehow all the way up to this area, hits it, right, and then it's at that point that it gets rejected and comes barreling back down. Now, If you go up there long enough and you hang there long enough before you test, you could envision a scenario where the final test, when it actually gets up here, when it pulls back, right, it can simply come back now into all this congestion area that has formed, right? So if you get up to here, then a pullback to here could set up another ABCD structure to try to take you higher. So you can envision a scenario where this market, comes up, tests, comes back down, then goes up a little bit farther, comes back, you know what I mean, and works its way back up. And I think if it's going to work its way back up, that's the way it's going to do it. The other scenario, so we don't lose track of it, is the opposite, and that is that, and it's easier to show this on a weekly chart. So let me just pull a weekly chart over, and I'll use the Russell as an example. That we still have large ABCD structures to the downside. In the case of the Russell, it's from here. So you got to move there. Let's just say it comes back to retest regen even on this time frame, right, off of this bar, and then that would potentially set up an ABCD structure to take us quite a bit deeper. So don't lose fact of on the longer term time frame and the intermediate term time frame in this case, there's certainly the case to be made that that move back up, when it comes back up to test into this region, if it fails, we could get the move, all the way back down to break out this lower low, that we just set, a couple, 3 weeks ago, and potentially come test those October lows. So, don't lose fact that this is still on the table. Just because we're working higher now, and just because we may make it all the way back to the retest regen zone, it doesn't mean we're going to actually work our way through it when it's all said and done. So sectors, we're going to get some key tests probably tomorrow, or certainly by Friday, I would think. XLP, the XLY. You could go to XLI. There's a few of them that are coming back up there. They're going to do their test, and they're the ones that are going to tell us what's going on. As far as the indexes, it's the NDX and now the NASDAQ pushing into that retest regenerate zones. And we'll see if the NDX can get over the top of it. That's going to be a key one on the indexes. World markets really didn't do much in Europe. If we look over at Asia, though, Asia looks set up to try and push higher. So let me pop up Asia right quick, and we'll take a look at it. And what we had in some cases there is some takeaway bars. So let me pull up, let me see which ones were I looking at. No, Shanghai, for example. Shanghai was up like 5%. But when I look at this, what I see is not 5%. I see a takeaway bar. In other words, you go down, and the very next bar, you take away everything that happened the bar before and turn it back upside. That's the sort of setup that can get this thing higher. And in the case of Shanghai, of course, you've got all this area up here that can be tested next. You get over it, then you can come back to do the bearish retest regenerate, which is off this swing point low. So I can see the case here that this thing can try to trade higher tonight. I think Hong Kong, if I remember right, did the same thing. Actually, it was even better. Hong Kong did more than a takeaway bar, right? Just gapped back up. Hong Kong has actually set up a nice little structure here to potentially do an ABCD structure to the upside. And even though it's not huge, it does what? Well, it takes you right back into the bearish retest regen zones. And that's what we're seeing in so many places, right? We're seeing these, these pushes up. In this case, the full retest would be way up there. But we're seeing these pushes up to get us back into those areas. And that's just because everything got sold down so far, right? In so many cases. Europe, well, actually, let me look at Japan right quick. So Japan, inside days, not really anything there. And I saw up in Toronto, we had the big move in oil and commodities. Toronto had a nice day off of that. Let me see what Australia did. Oh, interesting. So Australia does a takeaway bar as well, right? So you do a takeaway bar. So that was probably going to trade higher as well tonight. So I think overseas, supportive, sectors, supportive, indexes themselves continue to make their moves. You get over some more swing point highs. You get over that area in the Russell tonight. All in all, it's set up for the news. Now, typically when you get a push into the news, you have the potential for a sell the news. And we've certainly had a push into the news, right? We've been working higher for about 6 days now. So it would not be surprising to see some sort of sell the news take place off the announcement tomorrow. And if you think of the way that announcement's structured, you've got the announcement that comes out, and then after the announcement, you've got about a 30 minutes or so before Yellen's going to take the mic. And so you have the potential here for this move that has been going straight up now. You have the potential for this to actually get a sell back down off the news. And then Yellen comes in and tells us everything's okay. And then, maybe you pop back the other way. So I wouldn't be surprised to see whatever happens tomorrow, to see some sort of a pullback off whatever this Fed news is going to be. Options expiration on Friday. It's going to be a lot of pressure either way for a bigger move because there's so much wrapped into it in a very short period of time. You only have the rest of tomorrow after your announcements, and then you've got options expiration the next day. Okay, that's it for me tonight as far as what I think is going to happen. Actually, that last scenario I just talked about, I think is the case. I suspect, in my heart of hearts, that they're going to raise rates. They may raise them just an eighth. Maybe they do a quarter. But then Yellen's going to come out and tell us that it's only because everything's so great that we're able to do this. And the market's probably going to take that in stride and say, oh, not so bad. Or maybe she comes out and tells us that, that's it for this year. And the markets would probably rally off of that. Let's see how it plays out. Have yourself a great one. Thanks for joining me as always. Tell a friend, tell two, I'm LA. This is and was your daily NeoTA wrap. Have a great night. See you tomorrow.